Ladies and gentlemen, welcome to the Midday Market Monitor. Now, although we will be monitoring these markets, it's the World Economic Forum. Every CEO, every major regulator, president, prime minister are all at Davos right now. So that means that while we are going to be paying attention to markets, and we are going to be looking at the triple Qs and the SPY and all of these things, there is so much new content that has been released about some of my favorite companies, and hopefully some of your favorite companies as well, that I'd like to do a little bit of a listen along on some of these new conversations, specifically one that happened with Fox Business and Jensen Huang. A little bit of a longer conversation. I've only seen about half of it so far, but there was conversations with David Sachs, who is the AI and crypto czar for the United States working under Trump. His commentary about what's happening with the Clarity Act, what's happening with companies that are building out major data centers. That would be very important for us to listen to. Alex Karp ended up speaking at the World Economic Forum. We have Meta, Accenture, Dario from Anthropic. Trump ended up talking about credit card caps. OpenAI was there. So there is just so much that I want to essentially listen to. But let's not forget that also Netflix had earnings, IBKR had earnings, Charles Schwab just had earnings this morning. All of which that we can cover here as well. Now, keep in mind, we're not done with earnings through the rest of the week, okay? Tonight, there's not too much, okay? We have Pinnacle, Kinder Morgan, stuff like this. I don't really care about any of those names. Tomorrow, however, we have Intel, we have Intuitive Surgical, Capital One, those sort of names. So that'll be very important. P&G, GE Aerospace, Abbott, some of those are also tomorrow morning. Sodak Zach, we are here. Welcome, brother. One of the greats in the chat. Everyone say hi to Zach. Hopefully he's doing well. Did you hear your prime minister? I did. It was actually a good speech. Bought some SoFi sub 20 today. You're one of the few people. I mean, it did not last very long. But yeah, I mean, you might have an opportunity, never mind, to do this right now. If it drops below 25. You guys saw the video that I just put out last night on my thoughts about Q4. SoFi's it, okay? Like, I'm not going to turn around this stock. This is a $31.5 billion company. No one cares what I have to say about it. But here, let me just go that way. That way I can see my watch list as well. No one cares what I have to say about this name, but we are getting the Chime deal. I don't think anyone's factoring that in. Or the end of the Chime deal, I should say, but it's an additional $33 million. Loan platform business. What do you guys think is going to happen to their originations as we fall below 25 right now? What do you think what's going to happen to their originations now that we've just raised an additional $3 billion? Now, I know we originate essentially $7 billion a quarter on personal loans. 45% of that is actually through the loan platform business. So that's not actually using our own capital. But this additional $3 billion that we've raised is not like, oh, now we can lend out $3 billion more dollars. No, the way that it works as Brian Armstrong's sort of been hyping up recently, is that you only need to keep a fraction of that in reserves in order to lend out a lot more. So whenever you raise $3 billion, what it's essentially allowing SoFi to do is go out and lend out roughly about $27 billion because they now have $3 billion in capital. So what do you think they're going to do? Do you think they're going to sit on that and just like sort of sit in cash, put it in T-bills, or you think they're going to put it into student loans and home loans and personal loans that have garnered them massive returns on spend? Okay. Someone said they're bullying Amazon now. Let's go take a look at Amazon getting its teeth kicked in these last couple of days. In the last 5 days, now down 6%. Another conversation that we just had in the members only live stream earlier today was on PayPal. So PayPal, this name is just getting its absolute butt kicked. And if you guys are value investors, dividend investors, something along these lines, PayPal really might be worth a look again. I know the last time we sort of talked about this, it was like $62, still extremely cheap. But the difference between 55 and 62, like even if it just returns back to where it was not long ago, it's essentially a 12% upside, which, is the return of the S&P on a good year. Okay. So the discount that we've just seen over the last little bit, not outstanding the outstanding shares that we have, the new dividends that they're starting to offer now. It is officially a dividend producing business, right? They are still, not saying this will be forever, but they are still growing. It's an interesting name. Let me go ahead and just take a quick look. This is Fiscal AI. But if we go to total outstanding shares, and then also percent change on outstanding shares, this company is getting less and less shares over time at a pretty significant rate. Now buying back, 6%, 7%. Actually, it would be higher than that. Let's go to, it's not a great way to look at it. Buyback yield. They're buying back 11% of their business per year right now. That's without them increasing their buybacks. That's just at the current price that you can buy PayPal at. Adobe might be another one. I just don't know Adobe as well as I know PayPal. I'm not saying that this is the only tech name that's on sale. You can see Shift4 is at an extreme cheap rate. A lot of software names are getting sold off right now. For people that are looking for these sort of growth at a reasonable price or value type plays, I don't think it is going to be as much of a value trap as people think. These are phenomenal businesses that I don't think are going to be disrupted over the next few years, just through and through. Margins might change, the way that they offer their products might change, but overall, I think a lot of these existing businesses will still be around a decade from now. When would you add to Shop? Honestly, I'm not looking to add to Shopify. I love Shopify. It's a massive, massive percentage of my portfolio. Shopify is like greatly larger than SoFi is, for example. Not that I'm not anti-Shopify, but they have always been expensive. They're just one of those names. And they could end up seeing a slight sell-off based on this sort of AI play that a lot of the platforms and software names will somehow be outdone by artificial intelligence. I don't think that's going to happen at all. I think they're going to be one of the greatest beneficiaries of artificial intelligence, but that doesn't mean that the market needs to see it the way that I do, right? If it was up to me, SoFi wouldn't be down 11%, from last quarter to this quarter, even though we're going to see higher revenue, higher earnings, just an overall better performing business. So me and the market don't always see eye to eye. Okay. Let's see. Is Zeta interesting around this price? What is Zeta sitting at now? Oh, wait, that's not the comment that I highlighted. There we go. 1977. Yeah, I just, we ended up seeing the video from Wealthmatica, and he did a great job at talking about why they deserve a spot, you know, in markets, but I don't know how necessarily, like, I'd need to see how that differs from a lot of the other competition. I find that the visibility or transparency into that B2B industry is extremely, opaque. It's very hard to see whenever these companies are failing until earnings actually come out, and then you see the growth slow, and then by that point, it's too late. Example number one is the trade desk. Whenever they ended up seeing those 2 quarters that failed expectations, the company fell by like 60%, then it fell by another like 30%. Like, they get hit so unbelievably hard because there's not a lot of visibility into how they're doing as time's progressing. Whereas companies like Amazon and Meta and these sort of things, you can see the amount of advertisements that are going on the platform, the amount of credit card transactions that are happening on their platform, stuff like this. Robinhood, these sort of things, you can just see their monthly statistics. There's so much transparency into B2C companies rather than some of the B2B platforms that obviously can have very great margins, but if you get it wrong, it's hard to know until it's too late. Hi, Tanner. Love your videos and would like to make a question. You often say that you hold companies like Nebius. You'll hold companies like Nebius for a long time. Let's consider this company never pays a dividend. To generate profit, you have to eventually sell, and you must decide the stock price. It's peak to sell. No. Because every stock will eventually peak. My question, geez. When and how do you decide to sell companies like Nebius, SoFi? Do you usually set a price target and sell, or do you keep selling if the fundamentals for a new peak will continue? Or how do you? Okay, I get your question. You sell questions, or you sell stocks based on really 3 things. One, thesis changes. So I don't set price targets. I don't aim for a peak. I'm not good enough to know when a peak is. So if my thesis changes, if I believe that Robinhood is the platform where the new generations are trading stocks, and then all of a sudden a new company comes out, Trade R Us, and Trade R Us is growing at 300%. It's all everyone is talking about. I'm using it. My friends are using it. Everyone online is talking about it. They offer the best rates. They're giving you 5%, rebates on every trade. We don't know how it's happening, but somehow they're also saying that it's profitable and they find a solution that works. Anyway, you get the point. So then the idea that Robinhood would succeed in that environment, even regardless of that, by the way, this is the interesting thing. A company, I'm going off topic a little bit. Let's say there was another company that came out against Robinhood, offered a credit card that gave you 10% cash back. And then we go, there's no way they can make that profitable. They don't need to. They can bankrupt the whole industry and just say, hey, we're going to give it all back. We're essentially going to be a financial services charity. That's up to them, So another company doesn't even need to succeed in order for a thesis to be broken. It can just be a massive change in the industry. Look at stable coins and the take rate on payments affecting PayPal or other payment companies. It's not like the fees are all going to a new company. It's just that the fees are generally being reduced. And that if capitalism should work, that should happen in every industry across all places, is that fees are being reduced as service, like the quality of service improves and then the cost of service decreases. So number one reason to sell, thesis breaking, CEO leaves, something like that. The next one is that you find a company that is potentially cheaper. So although the company that you might like, which is Nebius, as you said, that could be a cheap company, but maybe IREN is way cheaper. Same industry, doing very well, but you like IREN a lot more. Well, that could be another reason to sell Nebius, is if you find a better opportunity. And the third reason is escaping me. I can pull up my, I got to rush to my notes. So cheap stock. Cheap stock. Here, I have it here. When the stock price vastly exceeds its intrinsic value. So this one I actually rarely do. But another reason to sell is if a company just gets way too expensive. I would look to I'll say one that'll offend no one. How about that? Zoom during the COVID era had like PEs in the thousands, and this company was, expected to be one of the top businesses in tech, and then you realize it's a video conferencing business, and that many companies are going to be able to compete here. It was egregiously expensive just because everyone was using it all at one time. That might have been a good reason to say. We know you wanted to say Palantir and Tesla. You did not know that. I was going to say Palantir. I wasn't going to say Tesla. And the reason why I sold Tesla is because I found a cheaper company, and that was Nvidia. Not that that was too expensive of a business, but very different. Okay. And there's lots of great ways. I saw a comment saying, there's ways to make a lot of money on your holdings without you having to sell. My hope is that I find a bunch of companies that I think are lifelong holdings, like what I've hopefully found with, and I hope is what turns into an Amazon or Mercado Libre or a Nubank, specifically a Shopify. I like that company and will most likely like it for the next 30 years. Obviously, things can change, but I just don't know how any of the technologies that have been created recently affect their business. I think generative, agentic, and physical AI are positive benefits to their business. I think that agentic commerce and just every faction of stable coins and all of this stuff is only going to be beneficial to essentially a not democratized. What was I going to say? A decentralized marketplace for e-commerce. But I also think Amazon will do well also. Palantir is perfectly valued. Thank you. All right. We'll see. Hey, dude, I didn't say it. I said Zoom, going back to the 2000 or 2020s. That's what I said. I said Zoom. Okay. Tanner muted me. LOL. Everyone can see your comment. I don't mute like anyone unless they're just like racist in chat or saying something like egregious. You can disagree with me. There's hundreds of comments passing. So if I didn't read your comment, and sometimes if people just spam too, that's one way that I will mute you. If you say your comment like copy paste like 4 times in a row, you are getting deleted. It was a test. Thanks, homie. Delete him. He's rage baiting. Get him out of here. Ban him for life. Okay. I'm kidding. When mute Spencer. Spencer doesn't get muted. How is Spencer not a mod in this chat? Oh, it's because I think it's because you make fun of me, right? Huang, don't actually ban him. I just saw that dude. His messages just got deleted. Okay. Oh, that's funny. If you guys looking, oh, okay, no. Okay, we have so much to get through. I love the questions, though. I love the ideas around investing. It makes me so freaking happy. Like, did your thesis on racism change? What does that even mean? Okay. What do we want to get into first? There was a long conversation on Fox Business from Jensen Huang. If you guys don't know, I am very big into this name, Nvidia. Okay. He had a long conversation, though. I think it's like 15 minutes. But I think that it's very important for the stock. Like, I think a lot of people are also in this name, especially amongst this community. The stock is still under $180 a share. But, you know, you see OpenAI in Davos right now, Anthropic. I think we need to listen to Anthropic first. His commentary, Dario's commentary on their potential targets is so ridiculous, it almost feels a little .com bubbly. You guys let me know if this is a little bit of a joke. But if this is true, you can throw a dart against the board, similarly to .com, to be honest, and pick an AMD, a Broadcom, a Nvidia, any of these names, and you're going to make a damn fortune. Hopefully, we find some good middle ground where the best end up succeeding and we don't end up finding a large bubble. But let's listen to Dario anyway, because he's one of the biggest names, fastest growing AI LLM, especially in recent years.
On the front lines of the AI revolution, joining us right now is Anthropic's co-founder and CEO, Dario Amodei. It's great to see you, sir.
Thanks for having me, Andrew.
So here we are. You just came out with a new model last week. A lot of people are buzzing about that here. I think it would be very helpful for the audience to understand how you see what you're doing, what the folks at Google are now doing, what OpenAI is doing, what you think XAI is doing, sort of what that actually even looks like anymore. Because it does seem like everybody's trying now all of a sudden to differentiate in different ways.
That's right. So, you know, I think we've picked a path that's quite different from the other players. You know, Anthropic, since the beginning, you know, Anthropic has thought in terms of safety and reliability of AI systems. And one of the things we realized is that that was very synergistic with working with enterprises as compared to consumers. Because enterprises really, they value the reliability, they value the trust, they value the long-term relationship with customers. And so we decided to pursue the enterprise business. We have, you know, we have consumer products, but they're not our major focus. It's maybe 80-20 on the enterprise side. And so that really allows us to proceed in a different way, right? We don't have to do ads. We don't have to focus on short form video. We don't have to focus on maximizing engagement. Instead, we actually just focus on making our models as smart and as capable as possible, because that's what enterprises are looking for. They're looking for capability. They're looking for intelligence. They're looking for optimizing complex business processes across things like finance, coding, pharmaceutical companies, manufacturing, energy, right? All the things that drive the economy. So we think of the work we do as most directly connected to directly driving GDP, and not all this kind of indirect or complex stuff like maximizing engagement.
But is the complex stuff video and images and all of that? And ultimately, do you think that those models will be able to do what your models do?
So, you know, I actually think there's a divergence, where if you're optimizing for consumers, right, you're trying to be as engaging as possible, you're trying to be as entertaining as possible. I actually don't think some of these other models have enough incentive to get smarter, have enough incentive to become capable of more tasks across the board. And we've been able to focus on that more.
I mean, that probably responds to some, it's probably music to the ears of some investors. We've spoken with investors. Satya Nadella was just talking about this at Microsoft. You know, his point is that if we don't see a broadening of more than just the big tech companies using this AI, if we don't see a broadening of just the wealthiest nations using it, then it is indeed a bubble, that there's too much infrastructure that's being built up. But maybe that speaks to who's going to pay for it and who's not?
Well, I mean, I think across the board, we're both trying to grow our revenue as fast as possible. Our revenue grew from zero in 2023, 0 to 100 million, 2024, 100 million to 1 billion, and 2025, 1 billion to almost 10 billion.
Yeah.
So if we can keep that curve going, or even anywhere close to it,
Yeah.
then the return, the investments will be justified. But I think you bring up another point that's also relevant, which is, we need to make sure that kind of the technology diffuses and everyone shares in the benefits. The startups at Silicon Valley, adopt this technology almost immediately. I think it's a little harder to get into the large enterprises, although we're spending an increasing amount of time on go-to-market work to try and drive that enterprise transformation and get enterprises to adopt it as quickly as possible. But then, there's all kinds of countries in the world. So, diffusing this technology across not just the developed, but the developing world, I think that's going to be very important. And, we're starting to do work with folks like the Gates Foundation.
Could you just estimate 10 years revenue growth?
It's very hard to say.
Should I ask? Yeah.
Anything I say is going to sound totally crazy.
Yeah,
but if you look at what AI is capable of, if you have these models that are getting more and more capable across a wide range of cognitive tasks, you look at all labor in the economy. That's something like $50 trillion a year. So I could easily imagine that the revenue of the industry or even single companies, if it's even 10% of that, could be $5 trillion a year. Now, that's something we haven't seen in the history of the world. That creates all kinds of problems, as well as creating all kinds of growth.
When you think about the growth, and there's obviously an expectation that you'll go public, as potentially OpenAI and others do as well. How much more capital are you going to need to raise between now and whatever that moment is? Because there's sort of the technology piece on one end, and then there's the capital raising piece. I don't know if you ever got into this thinking you were going to be a capital raiser all day long.
Not really, no. So the way I thought about it, and we talked about it when we spoke at DealBook, is there's this kind of difficult problem, this cone of uncertainty, right? Which is the revenue is growing very fast. You don't know exactly how fast because the rate of enterprise diffusion is unknown, but you don't know whether your revenue next year is going to be, 10 billion now, is going to be 20 billion, or is it going to be 100 billion next year? You don't know. You don't know anywhere between that, and yet you have to buy the data centers.
So what do you do?
60 to 80%.
Yeah.
Well,
for 10 years, starting at 2024 to 2028, 130 to 150.
Which model's telling you that?
This is ChatGPT.
Ooh, don't tell him that.
I thought they'd lowball it. I don't know.
What do you do when the cone of uncertainty is that wide?
So there are a few things that are your buffer. Yeah. The first thing that's your buffer is, the higher your margins are, the more, the more fairway you have between the amount you have to buy and the amount of revenue you have to support. So one of the fortunate things about being in the enterprise business is that we have relatively higher margins, and enterprise spending is relatively predictable in comparison to consumer spending, which is very fickle, right? We see Google and OpenAI fighting it out over consumer spending. We have more stability in enterprise. The other thing, of course, is, while you're growing that revenue is of course raising money. And so, we do that periodically. We raise very large amounts of money, and I would expect those to continue to increase. But that, as time goes on, our revenue will continue to increase fast, and we'll justify that fund.
What do you guys think about the industry getting to $5 trillion of potential revenue coming in annually? Ugh. I mean, if I was Nvidia shareholder, I'd feel very happy about that, but there's no guarantee that's going to come true. OpenAI said a very similar thing, by the way. We could listen to that, but honestly, I need to get into this Nvidia video. Dude, because they're outside, the outfits, everyone wearing their coats and everything is just, oh man, I'm loving it. Let's go ahead and listen to Jensen Huang, who is at Davos as well. He was speaking with Larry Fink as part of the World Economic Forum. However, I scanned through that just before going live. It looks like they're kind of going back in history a little bit, talking about the first, forms of reasoning, or delivering the first DGX-1 to Elon and the OpenAI team, stuff like that. So I don't really care to listen to this. I'm more listening for going forward. What does demand look like? These sort of conversations, and that could be very helpful for us. Let's have a listen.
2025 certainly was the year that AI went mainstream, driving double-digit gains in technology, fueling record deal-making across the industry. One company is at the center of the story, Nvidia, the AI chip leader, locking in multi-billion-dollar partnerships across sectors, reaching an historic $5 trillion market cap back in October. Joining me now is the man at the center of it all, Nvidia's president, CEO, and founder, Jensen Huang. Jensen, it's great to have you this morning.
It's great to be here, Maria.
Thanks so much for being here. How does that feel? What an intro I just gave you.
I know. I'm pretty excited.
Incredible. How is business going?
Do that every day.
How's business? Tell us about business and what you are seeing right now from customers.
We are seeing just incredible demand. And what's going on around the world is that AI, as you know, is a 5-layer cake. It starts at energy, then chips, the layer that we're at, infrastructure, cloud infrastructure, land, power, shell, building data centers. And then, of course, the AI models, and there's a whole bunch of those that are making huge breakthroughs. OpenAI has, and Anthropic has incredible work, XAI and Gemini. And then on top of that, the most important layer is all the applications. This last year, AI really hit its stride. What people don't realize is that this last year, AI became super useful, so useful that the layer above the AI models are able to now create incredible applications. This last year, AI startups, we call them AI natives, these startups raised $100 billion to build on top of the AI models. They're applications for healthcare, applications for drug discovery, for transportation, financial services, helping with making healthcare more efficient, all kinds of different applications. And so the demand is just incredible.
So demand is soaring, and you're already talking about work for calendar year 2027. Is that right? With some customers?
It's for sure now we're going to have a very large 2026.
You said that you had a backlog, a big backlog, $500 billion in backlog?
Yes.
Tell us about that. Where are you on that?
Well, since I said that a few months ago, that backlog has gotten bigger than that. And so I think we're just seeing, AI has gone from these language models to now going into healthcare, into drug discovery, into manufacturing. This last year, we made huge breakthroughs in this area called physical AI, where AI understands the world. It understands causality and the laws of physics, and you could use it for self-driving cars. And of course, we're going to see huge breakthroughs in self-driving cars. It's going to be all over, robotic systems of all kinds.
That is incredible. So talk to us about the different chips. I mean, have you started getting the licenses to sell chips to China?
President Trump, and we applaud him for doing this, has now licensed us to sell H200s to China. We're currently shipping Blackwells. And a couple of weeks ago, I announced our next generation that will go into production in Q3 of this year, which is called Vera Rubin.
Okay, so the Rubin, is the most advanced chip?
It's 10 times more energy efficient than Blackwell. It's 10 times lower cost for generating tokens than Blackwell. 10 times. And Blackwell was 10 times that of Hopper. So every single year, we're driving up energy efficiency and we're driving down the token costs. This way, AI can continue to be affordable, more clever, more smart, while being more affordable for everybody to use.
I want to get back to Rubin and Blackwell, but with regard to the chips sold to China, there are reports that China is telling its companies don't use American or don't use West chips. Is that true?
Well, they want to favor their companies, and that's understandable. But H200 is extraordinary for the Chinese market, and there's demand for it, quite significant demand. And I hope that they'll continue to keep the market open for us. The Chinese market wants to be open. They want to welcome competition. They want to welcome investment in their countries. We've been there for 30 some odd years. And we hope we can continue to serve that market.
But of course, President Trump sees this industry as a national security issue. And it is, of course, given the fact that your very important chips are used in the military. So there's a debate on whether or not China should actually be getting our chips. What's your take? You want to obviously sell to that market. But are there risks with regard to national security?
First of all, H200 are not used by their military because their military, like our military, builds on our own chips. And they build plenty of great chips. Huawei and many new startups, they've all gone public this year. hundreds of billions of dollars of market value now in building AI chips. So they have lots of AI chips for themselves. With respect to H200, we remember the AI stack is 5 layers deep. And we want to win the AI race. And we need to win the AI race at every single layer. We want to win the energy layer. We want to win the chip layer, the infrastructure layer, the AI model layer, and also the application layer. President Trump wants us to go win the marketplace, compete around the world, bring home jobs, create revenue for the United States, and continue to lead the technology around the world. We can't concede any market. And so having the ability to keep the United States at the forefront with Blackwell today and very soon Rubin, but now allowing American chip companies to compete around the world, we have the benefit of having a thoughtful and balanced strategy.
And of course, one of the pillars of the AI plan out of the White House is to export American technology around the world. Is that happening right now? How can you help to ensure that that does happen, that the world is using the models of your chips, that the world is using actually American or Nvidia type products?
We want to export American technology all over the world so that the rest of the world could build their industry on top. And of course, we have the benefit of being the foundation of the technology layer for as many countries around the world as possible. That applies to the chip layer. That also applies to the model layer, as you mentioned. These AI models are available for use all over the world. For example, OpenAI, I just heard that in China, in India, incredible usage of OpenAI in India, and that's terrific. We want to make sure that American technology is exported all over the world so that they could build their applications on top.
So how is the supply chain looking right now with all of this demand? Will you be able to meet that demand?
We can meet our demand, but demand is really, really high, and there's no question that for our company to grow at the rate and also at the size of our company is quite extraordinary. But our supply chain is doing terrifically for us. We have the largest supply chain of computing technology in the world, and we have hundreds of companies supporting us, and they're doing a great job for us.
That is incredible, Jensen. And you came on the last time when we spoke, and you were talking about your supply chain in Arizona that you were going to produce here in America. Where does that stand? Tell us about it.
President Trump wants to reindustrialize the United States. And AI is really a perfect time to do it, because in order to do that, in order for AI, you have to build infrastructure, and that infrastructure includes chip factories, computer factories, and AI factories. And we're building all three in the United States. Partnering with TSMC, Nvidia's Blackwell is now produced in Arizona, manufactured in volume as we speak. And this only started just this year. So the rate at which this was being done, TSMC is a great strategic partner of Nvidia, also of the United States. And they've built a fabulous factory in Arizona. In Texas, we have Foxconn building a 1 million square foot computer factory, completely robotics. It's going to be really, really advanced. And so really grateful to have their partnership. And of course, we're building AI factories all over the United States. This is creating just an enormous number of jobs. The thing that's really important to recognize that this is the largest infrastructure build out in human history.
Unbelievable.
It's really unbelievable. And it's a perfect time for the United States to jump on this, because it allows us to bring jobs home, bring a layer of manufacturing jobs with great trade skill workers, plumbers, electricians, network technicians, construction workers, designers, architects. It's going to create lots and lots of jobs.
It's a great point on jobs. We just spoke with Howard Lutnick, the Secretary of Commerce, and he talked about the importance of that Taiwan semiconductor investment. Watch this.
Our objective is when we leave office, we're going to have 40% market share. So we've got Taiwan, right? 2 blocks of $250 billion, right? Their companies are going to come here, TSMC. We gave them credit for $100 billion. So they've got another 150 to go, right? Plus Taiwan's going to put $250 billion toward their small and mid-sized companies. So we bring the whole supply chain from Taiwan here, try to get up to 40% market share, right? And then for the rest, the CHIPS Act, which was small, we doubled its size. We basically spent no more money and doubled its size. We have Micron building $200 billion in America. So we are going to invest $1 trillion in semiconductors in America, get up to 40% market share, and at least be able to take care of ourselves. God forbid we need to.
Your reaction, and how soon do you believe it is until the United States is then independent from foreign production?
Well, we've started in a very big way. Without President Trump and his strategies, we wouldn't be here today. And so I'm really grateful for all of his policies and encouraging Taiwan and TSMC to build here in the United States. In the next several years, over the course of the next 3 more years, we're going to manufacture approximately $500 billion worth of AI computing systems here in the United States. So it's just an incredible thing. The partnership with TSMC and Taiwan, it's great for Taiwan. It expands the Taiwan footprint into the United States. It's fantastic for them. It's, of course, incredible for the United States. Creates lots and lots of jobs. Now, the ecosystem and building up all of these fabs is probably going to take several years. You know, within a decade, there's no question we'll be independent.
What do you want to say about some of these circular deals that we're hearing about? And of course, you did a deal with OpenAI. People are saying, well, wait a second, who's buying what? And then they're going to supply chips. I mean, they're questioning because of these are so-called circular deals. What can you say about it?
Well, we're investing in these companies and we're getting shares back for them. Now, these are the opportunity to invest in OpenAI, the opportunity to invest in Elon's xAI or Anthropic. These are fantastic investment opportunities. There's some of the best investments in human history is being created right now. And so we make an investment in them. We partner with them. The investments that we make in them is a small percentage of our overall revenue. So obviously, they still have to raise most of the money themselves. But it's a great opportunity for us to be a partner to them, invest some small amount into them.
I mean, this is changing the world, obviously, and you are right at the center of it. I want to get your take about the amount of money and who's spending it, because for so long we kept talking about the hyperscalers, the large technology companies investing in AI and build-outs. But you're saying what I just heard a few minutes ago is that it's really broadening out. You're seeing corporate America, you're seeing healthcare, automotive, et cetera, invest. Is that what you're saying?
Absolutely. You know, everything from established companies. 2 weeks ago, David Ricks and I announced a big partnership with Lilly to build an AI lab, a co-innovation lab together to apply artificial intelligence, because we've made such huge breakthroughs in physical AI and biological AI that we can finally use the technology to advance drug discovery. Now, if you go back and just think about where does the drug industry invest their R&D dollars over the last 2 years before that, it's all in wet labs. Now going forward, a lot of it is of course still going to continue to be in wet labs, but a lot of it's going to be in AI. And so you're seeing a pivot of R&D spend in drug discovery, in healthcare industries, in automotive industries, of course, because of self-driving cars, manufacturers because of huge amounts of robotics investments. And so the large companies around the world are shifting their R&D spend towards artificial intelligence. In terms of startups, last year was the largest investment year for VCs, $100 billion or more. And a lot of that is focused on AI natives who are building applications for healthcare, financial services, or manufacturing on top of the AI models. And so these industries, these applications ultimately goes where we need AI to ultimately diffuse into applications that companies and people use.
Incredible. And how much money do you expect this to be happening and invested into AI on a yearly basis for how many years? I mean, how long is this going to take?
Yeah. Well, if you
are you talking about trillions of dollars of investment every year?
No question. If you just think about the world's ecosystem industries, $100 trillion, out of that, probably something like 20 some odd trillion dollars is R&D spend or OpEx spend. A lot of that is going to be augmented with artificial intelligence. Now, of course, AI is a very different type of software. This software needs infrastructure or AI factories to produce. And the reason for that is because the AI is aware of the context every single time it generates an answer. It's completely unique, and it depends on the prompt or question or instruction or the context that you provide. And so every single time it's completely unique, unlike previous computers where most of the software is pre-recorded and most of the content was pre-recorded and retrieved. AI is completely generated in real time, so it needs infrastructure.
Jensen, I want to take a short break and then come back. But when we come back, I want to ask you about the question that you hear all the time. And that is, with all of this money being spent on AI, are we inching toward bubble territory? So don't tell me right now. We're going to take a break, and then I'll ask Jensen Huang if this is a bubble. Stay with us. This company. I am back with the founder and CEO of Nvidia, Jensen Huang, here at the World Economic Forum. Jensen, before we went to the break, I mentioned the bubble talk. I want to get your take. A moment ago, you said we're talking about a consistent investment of how many $1 trillion every year?
Well, you know, I'm fairly certain that the world's R&D budget, which is along the lines of $20 trillion or so, is going to shift from the old ways of doing things to the new way of doing things based on artificial intelligence. And so the future R&D budget is going to drive enormous amount of infrastructure. We're going to be, you know, it's very likely this is the largest infrastructure build out in human history. And over the course of the next 15 years, a lot of estimates come in at, you know, $85 trillion. And so we're going to build a lot of infrastructure.
So if you're talking about a couple of $1 trillion every year going into this, what do you say to those people who say that's absolutely not going to happen? It's a bubble, and we're going to have some companies holding the bag, banks who are lending out this money. Because remember, some of these companies who are investing in AI, they're borrowing the money. Is it a bubble?
Well, during the time when companies build infrastructure, it is not unusual to borrow money. However, we're nowhere near a bubble right now. And the reason why we know that is because every single GPU that NVIDIA has in the cloud, and they're in Azure, they're in AWS, they're in, you know, their GCP, they're all rented out. They're in CoreWeave, they're all rented out. And in fact, the demand is so high for our GPUs that the spot price of GPUs we sold a couple of years ago are going up. And so that tells you something. And so demand for Blackwell is incredible. Demand for our next generation product, Rubin, is incredible. Demand for our past generations in the cloud is incredible. And so what's happening right now is that every single industry is now jumping onto AI because AI's progress in the last couple of years, because of agentic systems, reasoning AIs that are incredibly well grounded because it does research. And so it doesn't hallucinate like it used to. The AIs are now able to solve problems. And as a result, you could build application companies on top of it. One of my favorites, Open Evidence, Cursor. We use Cursor all over NVIDIA. So many great companies. 11 Labs, Synthesia, so many different companies. A Bridge in healthcare, so many used by nurses. Incredible companies. And all these companies are built on top of large language models. And they're finally solving problems that are really useful to the industry. And so I think this is the beginning, really, of a decade-long build-out. Eventually, surely we will have more, at some point, spot areas, more capacity than demand, but we're nowhere near that today.
But you founded this company. What an incredible company, and you're at the center of this, but others are seeing what you're doing and trying to compete. Is the space getting more competitive for you today?
Our space is incredibly competitive. Yeah. I've got a lot of competitors. It's hard to imagine. Google has been here for a while, and they're an excellent AI company for a very long time, and they're an incredible company. But we have competition from all sides.
And?
Well, we just have to run fast. You know, NVIDIA is the only company in the world today that can build the entire AI infrastructure, which the Vera Rubin was just announced. It takes 6 revolutionary new chips that builds these infrastructures that go for $30, $40, $50 billion at a pop. And so the scale by which we do things, NVIDIA's $20 billion annual R&D budget. We're the only company in the world that's cranking these things out every single year. Now, when we deliver new generations every year, we reduce the cost of token generation. We increase the energy efficiency. And if I keep doing that, we'll stay ahead.
That is amazing. $20 billion R&D budget at NVIDIA. Real quick before you go, what are the plans for Grok?
Well, Grok has a new architecture that is designed for extremely low latency token generation. NVIDIA's architecture is for high throughput, high energy efficiency. Their architecture is for low latency. So you can now respond very, very quickly. maybe if I can combine the two.
Okay. Yeah, dude. I'm so excited. Very, very happy Nvidia shareholder. Jensen's the man. I love Jensen Huang. He's the absolute GOAT. I've recently been listening to Thinking Machine by Stephen Witt. And yeah, happy man. Okay. So let's see. Jensen just laid out the roadmap to investors. Yeah, well, I mean, I think he said a lot of what people already knew, but it's the reiteration, right? It's whenever you see the Mag 7 names, which I think are so freaking funny, man. I think this will go down as being some of the easiest buys, the screaming buys of the industry that these large, fast-moving fortress balance sheet companies, including Microsoft, which I don't talk about often, Meta as well, also only at $600 now. If you look at them from a market cap perspective, they look expensive. And maybe I won't do it today, but we can go through and look at what you would normally call a small, mid-sized business that isn't potentially profitable yet or climbing on its way, that is heavily relying on debts, that are looking to break into the industry, which hopefully, if is true, then there could be a lot of upside there. But some people might be running up those costs in those stocks now for a potential hopeful future later on, where I think the Microsofts, the Metas, the Googles are already cementing themselves in this next future industry by having the largest data centers, by having the biggest models, by having the customers already. I just don't understand how people see that they lose, and yet their forward PEs, their trailing PEs, cash flows, you can decide how you want to look at these businesses, are below S&P 500 averages, okay? It's insanity to me what's happening in this market. Obviously, Jensen talks about the diversification of customer, and that's good. He's highlighting that this is not just a few customers; it's many customers. But overall, their biggest customers are still the same names of Microsoft, Google, and Meta. I could not be happier holding the Mag 7 names. They're such sleep easy businesses. I feel very excited. How are we feeling about Intel? I don't have any thoughts on Intel. It's not a name that I will personally hold. The stock's up nearly 10% today. Earnings are tomorrow after the bell. Yeah, I mean, good luck to Intel investors. I hope retail investors win in general. I never bet against anyone for making money. I'm not personally holding them. You take a look at CPU market share. That doesn't look to be in here. Let me see if I have this up. CPU market share from Intel doesn't look to be great. The customers that are taking over, you see AMD doing extremely well there. Honestly, Nvidia is going to be doing extremely well there also. How do I say this? I don't know. Seeing the sort of divergence away, even Nvidia after making a large bet, equity play on Intel. I don't think that Jensen did that because he's a big believer in Intel. I think that he did that because he wants to strengthen his relationship with Trump. I see some comments from people who aren't big Trump fans in chat, and you guys called it the glazing, the great glazing from Jensen. But honestly, he's actually been a very politically agnostic person in his career. He's never made a political donation, right? So he's very agnostic in that direction. But what I think that he's doing is the current administration is obviously allowing for him to sell into China and for him to get a lot of these deals. And if they need help with potentially securing more foundries in America, maybe Intel can be a part of that. $5 billion for, Nvidia is not even a lot of money these days. Okay. I don't know about some of the smaller names. I'm mainly focused on, like, I seem like a crazy person in this part of the market, buying things like Meta and I do buy smaller names. I like Nebius, especially if what Jensen said, that R&D is going to be more broad based and you're going to see a bunch of companies competing. That it's not just going to be hyperscalers that are going to win. You're going to need a lot of infrastructure. Well, Nebius setting up a bunch of AI factories cannot be bad for that type of direction if we end up going that way. So I very much like Nebius here, down 4.5%, down to $94 once again. Could be quite interesting. Nubank has been doing great the past couple of days, Tanner. Yeah, I noticed that. I also saw today that there was some new news from Nubank. We can actually bring this up really quick. Nubank and Mercedes-AMG Petronas F1 team announced a multi-year global partnership. So they're going to, I guess, sponsor one of the vehicles and just get their advertising out there as potentially they look to break into more of a global company over time. So very cool. I think it's kind of a little bit interesting for a partnership like that because they are only in 3 countries right now. Potentially they'll be in the United States. Potentially they'll be in EU, Africa as time goes on. But we haven't really made much headwind there, or we haven't really made any inroads there. But obviously F1 is a very global sport. So I find that a little bit, I'm all shoulders. I believe in Nvidia, though. Or sorry, Nubank. Another company I believe in, Robinhood. So this looks like old news, November 25th, but they ended up getting into prediction markets through their own, purchase of Ledger. Is it Ledger DX? I think it's Ledger DX. But it was a new joint venture with Susquehanna, and as of yesterday, it's officially closed, and they have officially purchased the Ledger business, or Miami International, whatever. So yeah, Robinhood and Susquehanna now have their little fingers in the clearinghouse and prediction markets game. Increased margins, a little bit less reliance on Kalshi. Called it from the start. We all knew it was going to happen. What else? So yeah, like I said, Intel's tomorrow. Intuitive Surgical is tomorrow for earnings. Capital One. Those will be some of the names that I end up following. In terms of yesterday's earnings, IBKR, this has been another one that I've just been looking at. This company is unbelievably interesting. I didn't realize, I let it sort of pass me by. And then yesterday I saw it down like 5%. And I was like, I don't know why this is down. This company is phenomenal. But if we go ahead on Fiscal AI, it updates the numbers almost immediately. So whenever the news report came out, you could go here and look at these numbers like almost instantly. But if we take a look at their revenue and then couple on net income, which has been climbing, look at the freaking margin on this. Okay. We'll go down to close trailing. Let's open up margins and go to net profit margin. Look at the profit margin. This is a net income margin of 73%. What is happening? This company is so unbelievably profitable. IBKR is a giant. So I don't know, man. If I ever see even the slightest dip in this business, by the way, just recently came out, Thomas Petterfy just recently came out and said prediction markets are going to be potentially bigger than equity markets. It's crazy. IBKR is one of the largest brokerages. They probably are available in your country. They're available in a lot of countries for very high end, not very high end customers, but sort of the midway between, you know, being a very active trader or investor and not quite getting the experience or service or product breadth that you would like to see from Robinhood, but also not the need for a family office or something like this. So I think the average customer that they have has about 190,000 of assets under management. I think Schwab's at about 300,000. Robinhood's at about 12,000. So they're more like 15x the customer size of Robinhood. Many less customers, though, about 4 million or so, 4.2 million customers. Why are they so profitable? That's the brokerage game. There's no cost to this business, right? And so if you're not advertising a ton, if you are leaning more into, you know, more of these advanced services like potentially artificial intelligence, stuff like this, then you could be very efficient. Cut head count and put that all towards profitability. That's what they're doing. It's insane. Yeah, this too. Thomas Petterfy is like one of the richest people on earth because even though he holds this company and it's not the biggest business in the world, he has such an unbelievable percentage of the business. So very, very cool. Yeah, a lot of Robinhood users do graduate to IBKR currently. I don't know if that'll still be the case going forward. Robinhood's definitely growing faster than them. But they are very interesting. I did not end up getting into eToro, but I've done a lot of work on this name. I'm looking at all their take rates across the business. You know, it does look very interesting. I'll have another video come out maybe today, maybe tomorrow. I got to do a BM&R update video, so I don't know which one will come first. The brokerage comparison, which I'll look at Webull and IBKR and eToro and Robinhood and all those. Honestly, I think Chris Patel, I know he was investing or looking to get in a position of Webull. What I've actually found is that the real cheap brokerage that's growing is actually eToro, and that Webull is the wrong name. Webull looks, this is just from slight looks in the last 2 days, looks like they do everything just slightly worse than eToro. They're growing a little slower. They have, you know, they're less profitable. They're more expensive. It just looks like the real potential discount brokerage purchase would have been eToro. Who knows? IBKR is expensive. It is. But unbelievable name. I'm using eToro, but would not buy the stock. I mean, you're for real proving me right. That gives me more reason. Is that no offense to you, but like, what do you not like about the stock? And you like the platform. You're using the platform. So if you said I like the stock, don't like the product, that would have been concerning. The fact that you say you like the product, don't like the stock means nothing to me. The stock is the part I understand. And that part looks unbelievable. Yeah. Tanner, what did you think about the Zeta pitch? I just don't like the industry. Yeah. Okay. That said, let's get back into some Davos DD. So we ended up looking at Jensen. Trump came out talking about capping credit card rates at around 10%. that part was interesting. Do we want to listen to Larry Fink and Ken Griffin? Potentially. Let's listen to Meta, actually. This one might be the most interesting. Meta, Joel Kaplan ended up talking about Meta superintelligence. Let's have a listen.
Company investing an enormous amount in AI, $600 billion in this case. Meta investing in AI infrastructure and jobs in the United States. Joining us right now is Joel Kaplan. He's Meta's Chief Global Affairs Officer. Joel, it's great to have you on the broadcast.
Great to be here. Thanks, Andrew.
So we've been having this sort of running debate with all sorts of business leaders this morning, especially in the AI, big tech, hyperscaler space, about the economics of it, about whether it all works, whether it all maths out. You're spending an extraordinary amount of money, but you're also doing it slightly differently, which is in some cases you've actually partnered with others, and I'm thinking of Blue Owl and the like in terms of private credit, so that you're not actually paying for all of it when you're building some of these data centers. How are you thinking about it, and how do you think the way you're thinking about it may be different than some of the others?
Well, thanks, Andrew. I mean, the first thing is what we're trying to build. Our ambition is to build personal superintelligence, which means putting superintelligence in the hands of everyone. We've got a platform that serves 3.5 billion people every day, so we have some real advantages there. And we are spending a lot of money to build the massive data center and power infrastructure necessary to bring that vision to fruition. And we're confident that with the right models and the right products, we're going to be able to build personal superintelligence and
but
empower
in terms
everyone.
of offsetting some of that cost, I mean, right now, I think you were probably on the sort of edge of the envelope for doing it in terms of the economics of doing it that way compared to some of the others.
Yeah, I mean, I don't want to get into too many of the details of the financing, just to say we've got a strong core business that helps us fund and finance this infrastructure investment. And we're going to look at lots of different ways to bring the strategic capital to bear to make sure that we can fund that infrastructure going forward.
Where do you think Meta is ultimately right now in the AI race? Which is to say, we talk a lot about OpenAI, we talk a lot about Google and Gemini. You can go down the list, but we don't talk yet with the same sort of cadence about Llama, which is the model that you guys have been working on for a long time.
Yeah, so we bring a lot of advantages to the race. Like I said, we've got the 3.5 billion people using it. We've got a real lead on wearables, which we think is going to be the next computing technology that actually brings that personal superintelligence to bear, because glasses, the partnership we have with Ray-Ban and Oakley, glasses lets the AI see what you see, hear what you hear, talk to you throughout the day. So we think that's the right form factor to bring AI to people. Right. We've got some work to do to catch up on the frontier with our models. I think we're going to get there this year, and then we're going to match that with our distribution.
Is it the model, or the other thing is distribution? Sorry, on just surface area. So you have amazing surface area, meaning I am as addicted, I hate to say it, to the gram, as the kids say, as anybody. Same with WhatsApp. Same with people going to classic blue Facebook, right? The question is how that ultimately translates into the place I go to either chat with a bot or to do other things for me.
Yeah, so right now, we already have 1 billion monthly active users using Meta AI across our services.
For real, no, you do not. I know they keep saying this, but what I think that they end up doing is, like, you open up chat and then like Meta AI accidentally gets clicked on. I've accidentally clicked on Meta AI so many times. I've never used it once. There's not a chance they have 1 billion users using Meta AI. It's such trash garbage. It's unusable. However, Robert said earlier that they're not in the race. I wouldn't count out their ability to come back. Okay. So, like Google Bard, if you guys remember this, was not good. They were not in the race against ChatGPT, but the companies that are spending the most will be able to catch up very quickly. And the amount of data that Meta has is not to be overlooked. Okay. So I very much think that they're still in the race. I very much think that, the usage for generative AI to create personalized ads and to help with conversion and to help with, really all internal use cases will be very good. But this type of thing about Meta AI and them hyping up their 1 billion users is such, as the kids say, cap. Let's go ahead and continue.
So we start with that advantage. Now we've got to bring the frontier models to bear, and we got to release the products that make people want to come and use that as frequently as they need in their daily lives to make them more effective, more productive, and just make them enjoy the things that they're doing online.
Joel, how do you navigate the political headwinds that are coming out of Washington, coming out of the European Union, coming out of so many different places? Because it feels to me like businesses that get caught in the cross currents are facing much choppier waters than they were before.
Yeah, well, we've had the advantage that President Trump, since he came into office, has been really focused on maintaining American leadership in AI and making sure that we win the AI race against China. And that means clearing away the barriers to innovation, whether that's data center and energy permitting, whether that's just making sure that we can make the investments with confidence that we need in this infrastructure. And so we've had that advantage, and that's been a big support for us as we've made these investments.
Does it create problems, though, when he says things that irritate European leaders to the point where things have gotten pretty tense? Because you have a lot of business here, too. And I thought for a while that the administration might be helping with some of those things to try and tamp back some of the over-regulatory reach from the EU. Is that not the case? And
well, they've been a huge ally in pushing back on some of the discriminatory regulation that we've seen come out of Europe, and that's been very helpful to us and other American companies. You know, there've been lots of discussions about tariffs over the last year. So far, we've been able to manage and ensure that we can continue to grow our business and offer consumers and small businesses throughout Europe the advantages our platforms offer. I'm optimistic that we'll be able to continue going forward.
Let me ask you a question. Maybe you think about it like this. I would say Facebook in particular, or Meta, was always considered or tried to be, and I think a lot of companies tried to be, quote, neutral companies, globally neutral. Not necessarily even thinking of themselves as American companies versus something else. They were global companies. They'd come here and they'd be global companies. And now there's such an emphasis on national champions. There's such an emphasis, at least in the United States, but I would say because maybe of what's happening in the US, than national champions elsewhere. And therefore you see a splintering of all of it. How does Meta, which is a hopefully global company, I imagine for your purposes, work through that?
Well, we're an American company that serves the world. And we're an American company that's investing massively in AI and AI infrastructure. And we're aligned with the administration in the US that it's very important that we win this battle against China. It's the most critical battle that we'll have over the coming years for both our national and economic security. But that's a battle that not only the US, but all of the Western democracies have a stake in. So we think it's really important that we progress on this together around the world because this race is too important not to win.
Do you see a splintering? We just had Ray Dalio on the broadcast, and he made the argument that basically the whole globe is effectively coming undone.
Well, so far, we're not really seeing that on the technology front. Obviously, we've got a very serious competitor in China. We need to make sure that we invest the resources, that we clear away the regulatory burdens. That's why it's so important that President Trump has pushed to eliminate discriminatory burdens on AI development and other technology in Europe. We need to make sure that we're aligned and we're harmonized in the way that we approach this because this is a battle we have to win.
Yeah, I mean, I didn't get the answers that I was looking for some of the things, but that's all right. I still believe in you, Meta. I still like you. Some of the questions, though, talking about, are they an American company? Like, who cares? All right. Let's talk about profits, but it's not just from an investing standpoint. People are also trying to calm some nerves on some of these bigger players having, such large moats. So I get that, but let's quickly listen to this. It's only about 2-3 minutes or so. Accenture CEO on how AI is shifting the entire landscape. Remember, this is one of the potential software names that people are worried about being disrupted.
Bit about what you're hearing from corporate clients as well. You all are front and center on AI and some of the things that you're discussing with. You've got a new survey that's out that takes a pulse of the CEOs, and I think it was a global survey, 3,650 C-suite leaders and 3,350 non-C-suite employees. But these are coming from the largest companies that are out there. What do you hear from them about AI, about how they're adapting?
I think the most important insight from that report is that 78% of C-suite leaders believe that AI is going to be most important in growth. And why does that matter? The whole dialogue about, is it hype? What does it do to jobs? It all comes down to, will AI help companies and countries grow? And if you just think about how it's going to affect us, the LLM is going to become the mall. When you go to your doctor or the hospital, they're going to be using AI so that you're having real conversations with your nurses that are not about, did they find the thing in your electronic medical record, right? The way that you do banking, like, it is going to change how we all live day to day. And that's before you get into how it's going to change, the changing, diseases, new kinds of materials. So growth is the number one thing out of that survey, and it is what we're seeing most excitement about for CEOs.
I don't know if you saw, but Satya Nadella of Microsoft came out and had some comments where he said that if we don't see adoption of AI beyond the largest big tech companies, beyond the wealthiest nations, then it will in fact be a bubble, all this infrastructure that's being built out. I know you were talking to the largest companies, but what do you think about that? What do you see just in terms of adoption? And like you were saying, to the level of nurses doing this, doctors doing this, that's the great hope. But is there enough? Like, the question is always, who's going to pay for that?
Right. Well, first of all, adoption is real. It's not real across every part of the enterprise, but as opposed to a year ago, you actually have actual tangible examples, like the pharma company that's now when they bring their medicines, they're bringing them faster to the actual physicians because they're able to use AI. So that is, real. And that's what's getting the enterprises more excited, companies more excited about using it. But we also know, and that's why it's important to be here in Davos, is if you take a regulated industry, if the regulators don't understand AI, then you're going to have limits in all regulated industries. And so it takes, first and foremost, an understanding of the technology. And that is very different than past evolutions, because leaders of companies and countries have to understand it in order to make choices. And this is the time to make the choices about how to be responsible, how to relook at entry-level jobs. We're very early, and now is the time to make the right choices.
All right. Okay. Axon is starting to look better and better while it stays in the price range. Axon's a cool name. I think that they definitely are in a good advent of, physical AI and artificial intelligence in general. I don't mind the name Axon at all. Drone technology, robots. There's a lot of products to sell there. I think that they could do well. Yeah, so what am I buying? I'll be buying some Reddit, Meta, Nebius, SoFi. Really, a lot of the names that I really like are in more discounts. And I think people are chasing some hypier, maybe catalyst-driven names. And they might do well at certain days, but then, you can have large drawbacks from those types of names. Like, take a look at what's potentially not working right now is all the things that were working, potentially last week. So all the last 3 days of gains in ASTS are just erased because today we're down 13%. And ASTS might be a great name. I'm not anti a nice space race, everything like this, but I'd like to see some of these companies show me a little bit of profits before I run into, Firefly Aerospace, for example. Same thing with, Quantum or something like this. I'm just not touching it. I'm not interested in this. I'd rather go in and find the names that have been not only shown their moat, shown their differentiation, but also still growing. Wow. HIMS might be an interesting name. It's just not a space that I also follow. So I believe in investing where, you might have some sort of information edge, or at least, have a level of competency. Any level of medicine, healthcare, bioscience, anything along those lines, it's not for me. if I can't answer specifically what differentiates HIMS from other providers versus it just being a good marketing play, which is how I view the company, and that might be very inappropriate to shareholders, but that's like for real what I've seen the company. And then Andrew Dudum, I think, has made so many mistakes on his tweets and telling people to buy and then selling the positions right afterwards. I just think it's a terrible look. So I don't care for HIMS. Not a place that I want to be investing. Tanner, you should do the market research on HIMS. No. Don't want to do that. I think there's too many, like, if I was sitting here in cash and being like, hey, I don't want to do any research, I think that's perfectly fine. But the amount of work, well, I think that would be, something to look into. I have zero care about hair loss and erectile dysfunction medications and even weight loss medications. I could not care less. Yeah. I think that not every play, like there's so many spaces in cybersecurity and energy and artificial intelligence that require me to do so, like, that I'm doing good work there, or in fintech with massive tailwinds. I don't think there's a big erectile dysfunction tailwind. Maybe there is. Maybe a lot of people's blood pressure is going down. Who knows? Yeah, any sauna place? Yeah. ED is not a joke, bro. I take that up with your doctor. Don't put that you're doxing yourself here. Okay? For me, I'm worried about artificial intelligence. That robot that you're going to end up buying in a few years is not going to judge you because you can't get it up, brother. So, you're all right. Don't be too hard on yourself. Not like you can. That's why you're going to HIMS. But yeah, it'll be all right. The grass is greener. I'll be investing in Nvidia. Okay. Thank you. Thank you. You're welcome. Tailwinds is, I think, a airplane comment. You have headwinds, takes longer to get to your destination. Tailwinds speeds it up. Okay. Bro, just you're welcome to himself. I said for you guys, for being a part of such a funny community. No, I just don't want to invest in HIMS. That's it. Or any healthcare space. It's not about a lack of doing the research or something like this. Like, I've got, if I could research everything, I would. But I would more likely, lean towards the Warren Buffett thing of like, hey, if you had 20 punches, you would invest very heavily into those names. I still have to work and understand the Mag 7 names, let alone I don't want to be disparaging to HIMS, but HIMS is all right. And I don't like the CEO. Nebius versus Iren. I once again need to look into Iren, but that I will do. For now, I like the work that I'm seeing from Nebius. I love the company. I love how all of their employees have worked before in the cloud space. The Yandex was a very successful business. So this is a serial entrepreneur. Love everything about Nebius. Love it all. You own all the hype names. Max. How wrong could you be, dude? I have owned these names, and then the hype comes to me. Okay? The SoFi was not a hype name when this thing was $4. Okay, I'm buying Meta now. This is not hype. I've owned Nvidia since $5. There's no hype. I had to take a rashy bunch of shit for investing in this company that was a supplier to Bitcoin mining rigs, and then Bitcoin was going down, so then everyone said that the company Nvidia was going to go to trash. Okay? They were making gaming rigs that were more expensive than AMD and their predecessors because they had to fund a lot of research into CUDA. Okay, these were not hype names. They're hype names now because they were successful. I did not buy Robinhood when it was a hype name. Tantrum Tanner's back. Yeah. Don't get me worked up. Nebius first IREN is like an F1 car versus a drag racer. Personally, I feel IREN is going to get used. It's going to get used and left behind. Daniel, without doing my like deep research into IREN, from what it looks like, that also is what I'm seeing. I think that they're accepting extremely large deals with some companies with bad margins, and they're doing that just for the headlines. And yeah, I got more work to do on it, but from the outside looking in, from a 10,000 foot view, it does look like it's not the same as Nebius. I really like Nebius. Okay. No, Amit had Robinhood way before I did. I essentially bought it twice the price that he did. But still, that sounds bad. It's like he pitched it to me at $8. I didn't see it. And he was like, dude, look how much cash they have. And I was like, yeah, and they're not using it for anything good. And the growth is not there. And then I saw a quarter that was an increase of new customers, average revenue per user, way more traffic coming onto the platform. And that was not a random act. That was a decision to turn up growth because now they had their ducks in a line. And I said, wow, okay, whenever they do want to turn it on, they really can. And they've demonstrated that. I'm going to go in. And I had to pay essentially double the price, $16. But now at $100 a share, who cares about 8 or 16? I mean, Amit does. His portfolio on Robinhood looks fantastic. But still happy to get in. And sometimes it's better to be certain and slightly late because you might still be way early than the other way around. Yeah. Okay. We want this, Tanner, double down on rage? No, guys. You know what's the funny thing? I'm not actually, like, I've shown you this before. My Whoop doesn't even realize, there's no, my stress levels are bottomed out. I'm so calm. Sleep score last night, 94%. Pretty good. Okay. Recovery, 89%. Come on now. Look at that. Resting heart rate, 52. Ugh. Sleep score 94 is elite. I mean, it's all right. You know what keeps getting me is sleep consistency. I'll go to bed at 11. I'll go to bed at 1. I don't care. But in order to get a high sleep score, they really care about that. But I don't think that's true. Like, if you look at my sleep stress last night, 0.0%. High sleep stress, 0. Medium sleep stress, 0. Low sleep stress, 8 hours and 34 minutes, or however long I was sleeping for. Sleep like a baby. It's important. Tanner, the markets. Okay. Oh, no. Tanner, you're getting lost in your Whoop again. Yeah, we're having God candles. Okay. Hold on. Hold on. get your head in the game. Let's see what the heck is going on. Okay, Trump said, we have formed framework of a future deal with respect to Greenland. That's what it is. A potential Greenland acquisition, the largest M&A deal in all of history. We have formed framework of a future deal with respect to Greenland. Trump, just a few minutes ago. Yeah, that's a nice looking candle. QQQ is up 1.2%, SPY up 1%. I'm here just talking about my sleep. I'm like, guys, I'm sleeping so well. And everyone's like, what the? Okay. A deal is coming. Yeah. Yeah, it looks like it. Wow. Let's go see what's moving. I wish I had a way to see not just which companies are moving the most right now, but or like on the day, but which ones have been moving the most in the last like 5 minutes. Oh wait, did I just see the VIX? Look at the VIX. Wow. ASTS, even the companies that no one wants to hold right now. Nice changes in trajectory. SoFi, if you got it under 25, nice way to make $1 per share. Easy work. Okay. Here, wait, hold on one sec. Let's see what CNBC has to say about this.
And the Supreme Court on tariffs, the real issues. So do not lose sight of them, and also do not lose sight of how the charts look right now. Where is the momentum? Where is the fear? Joining us now, Piper Sandler's Chief Market Technician, Craig Johnson. Craig, one day doth not a trend make. I am quoting you back to you. Did yesterday do any technical damage to what you see in the charts?
Right. I think it kind of shook people up a little bit. But again, at this point in time, the technical damage has not been that severe. I would say this is a market that's just sort of very resilient. It's rotating. It's been moving out of a lot of these Mag 7, Mag 8 stocks, and it's been rotating down cap. And I think a lot of that has to do with what you've been seeing in Japan, where people have been borrowing cheap money, bringing it back over to the US, levering it up, buying all these Mag 7 and Mag 8 stocks. Some of that is unwinding. And as you look at the charts there, Brian, those stocks are now starting to lag, and you're starting to see a lot of other stocks in the market starting to pick up the baton and starting to perform well. And I think you're going to see that sort of rotation continue to play out.
Is that what you mean by down cap? That maybe the halcyon days of the Nvidias and the Alphabets just crushing everybody else are over?
Yeah, I think those are wonderful companies, great companies, in fact. But at this point in time, if we're focused on where do we make money, like you asked, Brian, right now, a lot of the charts like Apple and Microsoft, they're all sort of distributional looking charts rolling over, and you're seeing stronger names down cap. For instance, energy, an area that you like, we talk about quite a bit. You look at things like Schlumberger, Halliburton, a lot of those charts look much more constructive. Even when you go through and you look at things in healthcare, there's a heartbeat there, Brian. We haven't had one in quite some time. And you're starting to see things like Medtronic outperforming Boston Scientific.
Okay, I don't care. Let's go ahead and read this Donald Trump tweet really quick. Based upon a very productive meeting that I had with Secretary General of NATO, we have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. This solution is consummated. This solution, if consummated, will be a great one for the United States of America and all NATO nations. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go in effect on February 1st. Boom. Scheduled to go into additional disclosures are being held concerning the Golden Dome as it pertains to Greenland. Further information will be made available as discussions progress. This is the biggest taco of all tacos. Hopefully you guys, this is the taco of tacos. Further information will be made available as discussions progress. Vice President Vance, Secretary Marco Rubio will be responsible for the negotiations. This will report directly to me. Thank you for your attention to this matter. Donald J. Trump, President of the United States of America. Nvidia is now up 3% on the day. Gotta love tacos. It's Taco Wednesday. It's not usually when we get the tacos, but I'll take a taco any day of the week. Wow, wow, wow. Even Intel, that's up 10%, nearly 11%, is also up. I don't care. Okay, bro. I feel like you're in the wrong chat. This guy's like, why are you talking about the markets? Relax. Tesla's up 4%. Wow. Wow. Wix up 4. Vertex up 4. VG nearly $9. Cirrus Logic up 5.4. Chipotle up 5.5%. Just had Chipotle yesterday. Still as good as it's ever been. Yeah, phenomenal. Lemonade, AMD up 7%. Up 7. ARM up 7.7. Amcor up 9.3%. Wow. Where is crypto? Let's check on crypto. Bitcoin now up 1.75%. That's also running. Hopefully going to break 90,000 here. Let's stay for the 90,000. Come on. Come on. Not okay. Doesn't want it. 90,000. We all saw it. Okay, let's move on to Ethereum. 3,000. The numbers are so depressing. It was so much more fun whenever we were at 120,000. ETH was at 4,700. People were believing in Tom Lee. Those days are gone. Okay. Where's Palantir? WTF happened? Please tell me. The Trump taco tweet that we just read looks like there's a framework of future deals in respect to Greenland and, in fact, the entire Arctic region, and that the tariffs that were scheduled to go in effect on February 1st will not be imposed. Good stuff. Market likes it. Okay. Nebius. What a day Nebius has had. You could have got this at $93 today, but in fact, you will now have to pay $98. Still under 100. That is quite the discount to where we were literally a few days ago. Okay. Yeah, where's silver? Down 3.5%. Isn't this crazy? Silver now $82, still falling. Gold, remember, these are just the ETFs, so the pricing is a little bit different. So just be careful with that. We're not looking at the actual ounce prices or anything like this. These are just the silver trusts, but the percentage moves is still easy to sort of track. That's all I'm looking for here. Markets move fast. It's risk on, baby. Time to go grab your grandmother's old gold coin stash and sell that to go buy tech companies. We're back on. Sorry, Grandma. No more saving for the next depression. We are buying Nvidia. Grandma, ever heard of Nebius? We're buying it. You know? I'm kidding. I'm kidding. Your grandmother can keep her silver, cutlery and everything for now. But eventually, Grandma, I'm coming for the cutlery. Okay. We are risk on. Intel. Jeez. Let's go see if silver's still finding more bottoms. No? My grandmother only buys BM&R. She loves Mr. Beast. Jimmy, dude, I just typed in Mr. Beast. BM&R. 2870. What a whirlwind day for BM&R shareholders. Tanner stealing from Nana. All my grandparents are dead. I already liquidated their silver. That's already long gone. No, I'm kidding. I'm kidding. Not kidding about them being passed. Rip Nana, but yeah. Okay. Let's see. David Sachs, the White House AI czar, was at Davos speaking. Do we want to listen to the AI czar? Let me know. Silver, maybe finding a bottom here. I guess there is a bottom to tariffs. Yeah. Where's S&P? Is that still climbing? Still climbing up 1.3%. We've gone from a trash day to very good. An up 1.5% day on the triple Qs is much needed if we take a look at what has happened yesterday. You know, terribly red day, down 2%, one of the worst days in the NASDAQ, ends up being up 1.5%, not recovering to where we were before, but it's nice to be able to take a little breather, right? The tariffs are off. Everyone can go back home. We can return back to stop calling me a loser for investing in big tech and you know, yeah. All we needed to do was spend $706 billion to buy Greenland. What, we should do this more often. Okay. Let's have a listen to the great and powerful AI and crypto czar. He moves markets.
At AI and crypto policy in the Trump administration. Two important members of it. David Sachs is the White House AI and crypto czar. Michael Kratsios is the director of the White House Office of Science and Technology Policy. Good morning to both of you.
Yeah.
Let's talk crypto policy. We had Brian Armstrong sitting in this seat just yesterday on this market regulation bill, which seemed like it was getting super close, and then seemed to get pulled at the last minute, in part because he and I think some other members of the crypto community pulled it. I imagine they were calling people like you during all of this.
Well, yeah, there's an issue right now, the so-called yield issue of whether stable coins are going to be able to pay yield. Right. There's a difference of opinion between the crypto industry and the banking industry.
And where do you sit?
I'm in favor of reaching a solution, and facilitating a compromise so that we can get a bill for market structure on the president's desk. We've seen this movie before, back in August when the stablecoin bill passed, the Genius Act. It died about 3 times before it finally passed and was signed into law. So there's a process here that has to be worked through.
What's a potential compromise look like? Because it looks like the banks don't want it to allow it to be happen, and it looks like the crypto guys are adamant that it happened, that they'd be able to compete. How do you split the baby, I guess?
Well, I think the banks have to recognize that that yield is already a feature of the Genius Act that passed and was signed into law in August. So if the bill ends up dying, then there will be a form of rewards. And so I understand their point of view, but again, if there's no deal, then they're going to lose on this issue. So I think it's in their interest to work something out. At the same time, I would urge some of the crypto folks to be a little bit, to see the bigger picture. Yes, I understand that yield is philosophically important to them, but so is getting an overall market structure bill. So I think if everyone has an incentive to be reasonable here, I think, and if they do that, we'll get a bill.
But is it a bill comes and then there's a sort of longer fight that continues, do you think, afterwards?
No, I mean, it's already passed the House.
Right.
So
No. I mean, that you sort of get this compromise. The banks don't love it. Crypto doesn't love it. And then over time, after this bill if this gets signed, then there's sort of a continued fight to get even more.
Well, a good compromise is everyone leaves a little bit unhappy, right? But I think what's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. So we're not going to have a separate banking industry and crypto industry. It's going to be one digital assets industry. And I think
will they be regulated
their opinions are going to evolve over time. And I bet you over time, the banks like the idea of paying yield because they're going to be in the stablecoin business.
But will they also be regulated the same way? And I guess that's a big, I mean, the banks will say, hey, if they get to do all the same things we do, how come they don't get regulated the same way?
Well, I guess because they're offering slightly different products, right?
Yeah.
So, but I mean, everyone offering the same product should be regulated in the same way. And we want to get to that harmonization.
Can we talk AI for a minute? I know Jensen's here from Nvidia. And there's been a big question about whether their chips should be sold to China, how they should be sold. It seemed like they were going to be allowed, then they weren't going to be allowed, then they were. It's gone back and forth. And I just want to, if you can explain to the viewers what your actual thinking is on this topic, what it really, are you worried about the security? Are you worried about them having too much access? Are you thinking if we get these chips out there, that'll actually, from a competitive perspective, sort of push out the Huawei's of the world? What is the actual sort of strategy behind the White House's view on this?
Well, the latest reporting is that China doesn't want the chips.
Right.
They're not going to let the
That's the next, right. So here we are. We've had this
so there's this huge controversy over here about whether we should sell them to China, and then China's saying they don't want them. The reason China doesn't want them is because they want to indigenize chip production. They want to have their own chip industry, and specifically, they want Huawei to be the national champion. Now, you asked about our thinking, which is if we can sell a previous generation deprecated chip into the Chinese market and take market share away from Huawei and prevent their scale up, we think there's some value in that. But I think this issue is going to be largely moot because China sees the same thing we do,
and you think it's
they're not going to let the chips.
And you think it's just it's a line in the sand. It's not changing, because I know this has gone back and forth now.
This is just where things are right now.
For how many months?
David, you not the wealth tax notwithstanding, you know what CEOs are feeling out in Silicon Valley, I think, and I think of Gerstner, or Peter Thiel's been with Trump for a while, but I look at Elon, Alex Karp, Lonsdale, Chamath. The president has embarked on some controversial moves lately, and he's coming to Davos with great consternation among a lot of the elitists and glitterati in Davos. Are CEOs just not speaking up because they think Trump is just crazy, and they're afraid of retribution? Or are things going pretty well, in your view, with the way the president is managing the country?
Well, I think from my point of view, and I think it's the point of view of most of the tech CEOs in Silicon Valley, things are going incredibly well.
Okay, guys, we need to pause this for a second. The markets are still just going up. I think whenever we started this, the triple Qs or the NASDAQ 100 composite was up 1.5%. Now it's up 1.86%. It's literally just like we're just still climbing. Hopefully I didn't just call the top. Please, 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 for my sake. Okay, thank gosh. This is a taco. I wish I ran a local taco joint. I'd say right now, coupon code Trump. You get 10% off every taco today only. We could do this. Who wants to start a taco business with me? Trump Tacos, 1.9%. Okay. Let's have a look at some names. NBIS, the great and powerful Nebius, now breaking into green on the day. Let's have a look. What else is potentially breaking green? Clean Spark, Webull, Copang potentially, Amazon. Yeah, that must have been red on the day. Yeah, look at that. Just beautiful. What about Microsoft? Microsoft was down today. Microsoft only down 1.8%. This was down like, we were approaching 4%. SoFi up 1%. Triple Q's 1.85. This might have been where we're potentially topping out. Where does that leave silver and gold? Wow. Down 3.5% on silver. Gold still up a little bit, but erasing a lot of those gains from earlier. We're all in on the risk on trade. High beta names. It's not even high beta. I mean, like, we're just like, what's PayPal doing right now? Yeah, PayPal's running. It's just equities. People just want equities. You know? Oh, Micron, that's a good one. What happened to Micron? And this name will not slow it. Like, the Trump tariffs are not, they're like, yeah, I mean, it's a benefit, whatever. We were going to buy you anyway. The TQQQs? Oh, gosh. Up nearly 6%. That's a reversal. The only thing high beta is us. All right, bro, chill. Put yourself in that camp. Why are you putting me there? Netflix. What does this do for names that are trading on this type of behavior? Robinhood now up 1%. Look at that. Look at those candles. IBKR just recently had earnings up 7% now. Look at this swing, by the way. You could have purchased this company at the time that... Why can't I do this? At the time that they announced earnings, we ended up seeing this massive spike down to $66.50. Okay? And now you have to buy this company. Instead of $66, you have to pay $76. That swing is huge. Why the turnaround on the drop? Trump is dropping the need for the 10% tariffs because they feel like they have a deal, essentially, on Greenland. As long as that goes through, the tariffs won't go through. So that's even why we're not ripping even more and not getting back to where we were previously. It's because it's not guaranteed just yet, but it definitely is a great step forward. All right. Sorry, I know I looked at Netflix, but I don't even remember what I saw. Down 2.75%. Okay. Japan's 30-year bonds as well. Okay. All right. Little cooling off from the fear and FUD. Shopify. It's part of the software names. It's part of the ass kicking. Or the butt kicking, sorry. It might be school is returning. Kids are in the car. My apologies, ladies and gentlemen. Don't use that. Listen to your mother. You know, study. And then one day you can be a YouTuber like me. No. Well, I mean, okay. Anyway, CoreWeave down 4.2%. $91 on CoreWeave. Oracle down 3.2%. $174 on Oracle. Where's HIMS? We were talking about HIMS earlier. Did they get the Trump bump? Yes. Yes. Why the evil laugh? It was less of an evil laugh and more like, I'm a loser. Like, I'm the adult that whenever people go, oh, and, you know, I'm at a dinner party and they go, what do you do? I am a YouTuber. Oh, they're like, oh, so you're unemployed. Yes, I'm unemployed. All right. Let's go ahead and listen to Saxy Poo.
Just afraid they're
No,
afraid
I
to
don't
speak
think
up.
so. No,
You
because I talk to
can't
them.
speak for all of them. But
But I talked to a lot of them.
Can you say that again? Just can we put it to bed?
No, so look, we talked to a lot of CEOs, some of whom, even off the set, will say things about the president or about the tariff strategy or this or that they're very critical of. And then they publicly, they don't want to say these things because they worry about whether there will be sort of a retribution either to their business or to them personally or something like that. You've heard this before. Right? I can't be the first person to have ever said this.
Well, let's talk about facts as opposed to vibes.
Right.
So the fact is we're coming off a 5.4% GDP growth in Q4.
Right.
We're down to what, 2.6% inflation, down from the Biden high of 9%.
Right.
The largest productivity increase we saw in Q4 in years. AI is going extremely well. President Trump's been incredibly supportive of the tech industry. I mean, like they haven't seen before. Biden was imposing all sorts of unnecessary regulations. I think the tech industry is very happy with President Trump and the performance of this administration. I haven't heard any of the negative sentiment you're talking about. Right. But look, are there CEOs who are longtime Democrats who've always been the Democrat Party? Yeah, of course there are. And some of those people don't like President Trump, and they never will. But the ones I talk to who are happy about the business environment, they're very happy with the performance of this administration.
Naively, I thought, what a year for the 250th what did we decided what it is? It's semi-quincentennial or something like this, with GDP at multi-year highs, perhaps, and the stock market's at all-time highs, and a secure southern border, all these things. I was ready for a ticker tape parade and some fireworks and stuff. And I was under the impression yesterday, talking to David Rubenstein, that we have lost our way in terms of a country, and all the values of our forefathers that made us great.
That's not really what Rubenstein said.
He didn't say it. He was just being asked to say it.
Listen, it's politics. We got Democrats, Republicans, and there's always going to be a lot of partisan rhetoric. And I didn't see that interview. But look, Democrats are going to Democrat. The fact of the matter
Democrats
is,
are going to Democrat.
Democrats are Democrat. But the business environment, I think, has not been better for years. You see that with the GDP growth rate, with the inflation rate, the unemployment rate is still historically low. I mean, everything seems to be going extremely well. And I think we're poised for an even bigger year in 2026. So
the flip side, David, is invading sovereign nations, or the threat of doing it. If it's just to negotiate a good deal, it's one thing. But if it were to come, do you know what's in the president's mind? I'm going to ask him, but do you know what's in the president's mind? How far he would take this for Greenland or in other contexts?
Well, no one can speak for the president, but
a lot of this is already past due, so we can kind of brush over this already. I don't know if you guys want to keep listening to this or find something a little up to date, but I was more interested whenever he was talking about crypto and the potential AI stuff, let alone the Greenland conversation. Okay. Let's go back. Let's see if I can also find some commentary on the recent Trump taco trade. But yeah. Look at the VIX. Oh, VIX, I could kiss you. Down 16.7%. That's what we like to see. Well, I mean, maybe some people like it the other way around, but yeah, not me. I went shopping today. Who bought stocks today? What did you get? And how good are you feeling now? Stock market is up. Did Trump do something? Yes. He chickened out and is not going to impose tariffs on EU countries. BMNR and SoFi. I bought triple Qs. Apple, Amazon, Visa. What an investor. OSS. Roblox. What else you guys got here? Cypher Mining, Palantir, and OSS. Buying Palantir here. I knew you guys existed. Like, I see the orders. I couldn't never put a face to a name. I'm happy to meet a Palantir buyer at, what are we at now? 161, or potentially even higher. Maybe in the 162, 163 range. They live among us. Yeah. I didn't know. Palantir, Nvidia, and SoFi, ASTS. Cool. I bought eToro. Awesome. Enjoy. You're in a lonesome crowd. I think this company actually fell under 30 today, did it? No. Was it yesterday? I'm pretty sure it fell to like 29.68 or something. Wait, let me go. Yeah, there it is. Yesterday. Absolute craziness. Nuts. Archer, Zeta, UiPath, Nebius. Nebius continuing to push higher. Qs are now up 2%, dude. What a reversal. Trump, keep doing this, man. Stop talking about tariffs. You said you want a nice stock market. You're happy when people are making money. Stop talking about tariffs. Gosh. Yeah, all the videos previously on tariff talk is just completely useless now. So great to know. Trump is creating another generational short squeeze. Yeah, a little bit. Okay, ladies and gentlemen, I did not realize the time. It is 3 o'clock, which means I got to go. I'm way past when I'm supposed to be live. So thank you all so much for watching. If you guys want to see more content like this, watching the markets every single day, as well as putting out videos, hopefully every day, trying to keep up with that. But, you know, I'm doing my best. Make sure you guys hit the subscribe button. That's all you got to do. Thank you all so much for watching. Really do appreciate your time and enjoy the gains. Wow, the market hates that I'm leaving, dude. Look at that. Guys, don't sell. I was joking. I'm staying. No, I'm kidding. I am leaving.